The stochastic oscillator is a momentum indicator that stays within a specific range. It shows where an asset's closing price is compared to its high and low over a set period. This tool tracks market momentum and spots overbought and oversold conditions. It's straightforward to use and can be pretty effective. For example, you could go long when both lines are above the 50 level, with the blue line above the orange. On the flip side, you'd go short when both lines are below 50, with the orange line above the blue. Now, imagine taking this solid indicator and cranking it up, not just doubling or tripling it, but multiplying it 28 times, each with a different length. That's what this new indicator does. It packs 28 stochastic oscillators, each with a unique period, making it a top-tier tool for cutting through fake signals when trading. This video breaks down how it works. If you find it useful, hit the like button. Let's dive in. This new tool is called the Stochastic Heat Map. To use it, head over to TradingView, pull up any trading pair you want, and pick a time frame. I'm using the 1-hour chart for GBP JPY. Click on Indicators, search for a Stochastic Heat Map, and select the one by this amazing author. There it is. A heat map is colors ranging from the coldest, shown as the darkest blue, to the hottest, marked by the deepest red. These colors create a gradient that tracks market momentum. You can see the individual stochastic oscillators stacked up, from the fastest at the bottom to the slowest at top. The settings show an insertion value of 10. So the first oscillator has a period of 1. The next is 10, then 20, 30, 40, all the way up to 280. A white line called the fast oscillator line cuts through the indicator window. It's calculated by averaging all 28 oscillators. Right behind it is the slow oscillator line, a smoother version of the fast line, used to spot longer-term trends in the market's average price data. To tweak the smoothing for these lines, go into indicator settings. You'll see options for the fast oscillator line and the slow orange line. At the top, there's a setting to smooth out the oscillators themselves. By default, it uses the EMA, but you can pick other options. The theme is just about colors. The third theme is the default, but the second theme looks different. And the first one's another style. I'm sticking with the third. The insertion, as mentioned, sets the gap between oscillator periods. If you want them spaced by, say, 20 periods, you'd enter that, so you'd get periods of 1, 20, 40, 60, and so on. The Style tab lets you change the colors of all 28 oscillators. There's also an option to color the price candles based on oscillator values, giving you a clear visual of momentum shifts. You can turn that off in the settings if you don't want it. Just scroll down to find it. I'm keeping it on for this strategy, but there are 2 plots we don't need, so disable them to hide those lines. Hit OK, and you're set. Now you're probably wondering how to trade with this thing. It's simple. The darkest red means bullish momentum is at its peak. Those are the spots to take long positions. The darkest blue shows bearish momentum is strongest, so that's where you'd go short. But like any indicator, don't use it solo. You don't need a million other tools though, just one more. A trend filter called the Exponential Moving Average, or EMA. Double-click it, set the length to 200 to catch longer-term trends, and make it a brighter yellow for visibility. Then click OK. Next, let's cover how to combine these two for a high-profit strategy. Alright, let's talk trading. To take a long position with these indicators, here's the deal. First, confirm the market's in a bullish trend using the EMA. Price needs to be above it, like it is here. Second, find the resistance level tested at least once before a breakout and close. Look at this resistance. Price tested it here, failed to break, tested again, failed again, then finally broke and closed above on this candle. That's your setup. The last step to confirm that during the breakout, the market had a strong bullish momentum to hit your take profit. Check the stochastic heat map. All 28 oscillators should be dark red, showing max momentum. That boosts the odds of hitting your target. Enter the long position, set your stop loss at the latest swing low, and aim for a 1 to 2 risk-reward ratio for take profit. Let it run. And as you can see, it paid off. For a short position, flip everything. First, confirm a bearish trend. Price should be below the EMA, like here. Next, spot a support level tested at least once. Here's the support. Price tested it, failed to break, tested again, then a third time, and on the fourth, it broke and closed below. If that candle looks weak, skip forward a few candles. Price stayed below, confirm the breakout. Finally, check that the breakout has a strong bearish momentum. The stochastic heat map should be a dark blue, signaling the momentum's enough to reach your take profit. Enter the short, set your stop loss above the latest swing high, and target a 1 to 2 risk-reward ratio. Let it play out, and it's a winner. That's one way to use this indicator, but there's another. I added an extra tool that prints long and short signals based on solid price action concepts. To trade with it and the stochastic heat map, look for a long signal on a candle colored bright orange. Second brightest after red, meaning bullish momentum's strong enough. Here's one. And another, and another. For shorts, find the short signal on a dark blue candle, showing bearish momentum's good to go. That trade worked out. This buy and sell tool is called PT Market Beacon. It's a custom indicator built with ChartPrime. Grab it via the link in the description below, and you'll also get other ChartPrime tools. The Prime Oscillator for momentum and divergence, the Oscillator for fast scalping, Market Dynamics Pro for price action labels, Market Oracle Pro for trend analysis, and the Prime Screener for spotting trade setups. That's it for this video. If it helped, hit like and subscribe for more. See you next time.